All right, welcome everyone to our pipeline roundtable. It is February 19th. It's a Thursday. Thank you for joining us. I'm Lane Guger, and I am an associate here at F Street. I work on our developments and acquisitions, and I'm joined today by my colleague, Brian Gallagher.
Hi, everybody. Thanks for joining us. As Lane mentioned, I'm Brian Gallagher. I'm also an associate here at F Street. I work a lot with our investments and our investors, and we're really excited to talk with everyone today about our pipeline, specifically for industrial acquisitions. How do we find these deals? Which deals do we know to look for? We're going to be going over quite a bit today, so if you have any questions, toss it in the chat. I think you can raise your hand on the Zoom, so you can do that, and we'll make sure we get to them right away.
Yeah, awesome. Thanks, Brian. So real quick, Brian and I just want to go through how F Street develops a pipeline. These deals don't just magically fall into our laps and then we send them to investors and say, hey, what do you think about this? We have a rigid process that we like to run, and that starts with defining what our buy box is. So Brian, why don't you give us a little breakdown of how we define our buy box?
Yeah, absolutely. We're looking for industrial assets, call it built between 1980 and maybe the mid 2000s, 2005, that we can buy at a below replacement cost. It costs approximately $100 per square foot to build industrial today. So if we can buy a building for anywhere between 20 and 50 or maybe even $60 a square foot, we know that we have an asset that can't be built at that price today. So it means we're immediately getting in at a good value. Anything over and above that is really discussions with our investors to understand what is their appetite for investments. Do they like high yielding cash flow? Do they like taking on a little bit of risk to get a lot of yield down the line? What types of deals are they looking for? What geographical markets are they looking for? So our buy box is fluid. It changes over time. It changes with our experience and discussions with investors, but it's industrial assets that we can buy below replacement cost and generate a above market yield with throughout our hold period.
That's great. Yeah. And just some examples for our investors. Last year we closed on a couple deals, one in Yuma, one in Effingham, where we're buying fully vacant buildings. We've saved up some operating reserve, interest reserve, so we can make sure that we can pay all the property's expenses and our loan's interest payments while it's vacant, but knowing that we give ourselves a 24-month window to lease it up, and that is a risky play, but huge value upside on the back end. Other deals like we've bought in F Street Normal, F Street Bear Creek LLC, where we have tenants like DuPont and General Mills, but we're still getting a great cash on cash yield for our investors with long-term leases in place. So we have different investors, different appetites, but we like to offer a couple different types of these deals to our investors.
Yeah, exactly. And I always tell investors, maybe not every deal is for you. Maybe not every acquisition is for you. Some people like the long-term leases and some people like the riskier plays. So we're always open to have discussions and help determine which opportunities are right for you and get you into investments that you feel comfortable with and are going to help grow your portfolio.
Yeah, that's great. So as Brian said, we have an ever-evolving buy box that we like to stay on top on our investor appetite and the economy. And then the second step of getting these industrial deals done is the grind. It's making sure that these deals are coming across our desk. And there's a couple different ways we do that. One is through brokers, right? So Brian, if you want to touch on how do we talk to brokers, what medium of conversation are we having with these guys to make sure that we're getting sent all of these deals?
We communicate with brokers. We text them, we call them, we email them. We talk with them in person at industry events. We were at an event last night.
Yep.
A lot of brokers there. There's always conversations to be had of, hey, what are you seeing out there? You have any new deals coming up? So that's call it, high level. We will communicate them any which way we can. Additionally, we try to get on their lists they send out email blasts daily, weekly, monthly.
How many emails do you get every day from brokers that are peddling industrial buildings?
So we show up in the office and we open our email inbox, and generally there's between maybe 30 and 40 unread emails. And maybe 20 of those have industrial acquisition opportunities across the country that are for sale.
Yeah. And so we're getting as many deals across our desk as possible. Why is that important?
Because it's a selection process. We want to have a wide sales funnel at the top, just like anything. And then to bring a deal to our investor, it has to go through several rounds of due diligence and scrutiny and stress testing to make sure that what we're bringing to our investors is the best deal that we could find out there. So our investors, we had a big year last year where we acquired a lot of industrial assets. there were countless assets that our investors never saw, investments that our investors never saw because they got self-selected out. So that's why we need to have a wide net at the top and funnel everything down throughout the call it the pre-investment process.
Yeah. Yeah. We just had a question asking how our acquisitions have performed today. So far, our acquisitions over the last several years have been doing really well. We are seeing some great lease up in Effingham, Illinois right now with the fully vacant property that we bought there. Same with in Yuma, Arizona. We're getting a lot of traction with our leasing. On top of that, we are making sure we're taking great asset management care of our properties where we have the existing tenants, pushing renewals as quickly as we can, making sure the buildings are staying in great condition, exploring refinances and sales as soon as possible. Brian, do you have anything else to add on that?
Yeah, additionally, the nice part about these industrial acquisitions is we're having a cash flow distribution in that first month
Yeah.
for a lot of these deals. And so a deal like F Street PDC LLC or Wheeling, we have we've hit our benchmarks and our metrics that we projected each and every month.
Yeah.
And it's just a little bit faster of feedback of, call it pro forma versus actuals on the industrial acquisitions than maybe it is on a multifamily development.
Yeah, 100%. And if you have any questions on specific industrial assets or multifamily assets for that matter, you can reach out to Brian or I, Brian, Brian at fstreet.com or Lane, Lane at fstreet.com. We'll always be happy to help with any questions you have. But moving back to our pipeline, we talk about getting the volume of deals that we need to make sure we're finding the needle in the haystack or the gem in the rough, right? But once we found a deal that looks good, we take it to the team and we perform the is it worth it test, right? So the is it worth it test isn't a deep underwrite, but it's saying, hey, does this fall into our buy box? And if it does, what price do you think makes sense for us to go after this building at, right, Brian?
Yeah, absolutely. What price would we buy this building at? What would the returns look like at that price or at that basis? One thing that we always say is you can't retrade your basis. Once you buy a building at $10 million, you can never get a lower basis in that building. That is your basis.
Right.
But if you buy that same building for $6 million, you're going to just always be in a better spot because your cost basis to start was just that much lower.
Yep.
And then from there, we dive deeper in. If we think that there's some real opportunity, some real, as we'd call it, juice with that investment, we'll dive deeper in. We'll talk with the broker again, get some more market information. We'll do our own market research, start our full cash flow analysis, figure out, is this a short-term hold? Is this a long-term hold? What does this investment look like? And then we continue moving the process from there.
Yeah. So to go along with that, our internal team has a daily meeting every day when we like a building, we do a deep underwrite on it, we discuss what's the value thesis here, why does this deal make sense, and at what price does it make sense, and then we review it as a team. And at that point, the next step is writing a letter of intent. So an LOI, as you might hear us say, letter of intent means that we are writing to the seller or the seller's broker that we're ready to purchase this building. And one thing that really sets F Street apart from the next group is that we act quickly, right? So we do this whole process that we've explained to you as quickly as possible. So we get a deal on our desk at 8 a.m. We try to turn out our underwriting, have a team meeting about it, and send out that deal no later than end of day, but as quickly as possible, hopefully before lunch if time allows that day. But when we're writing these LOIs, Brian, what is important to us? What messages are we trying to convey to these brokers, to the sellers of these properties?
Yeah, I think every deal is different. I think the fact that we're able to get them an LOI with an actual offer quickly, it means a lot. There's a lot of conversations that we have, as you know, where a broker will tell us, oh, there's a lot of people looking at this building. You ask them how many LOIs or how many offers do you have? And they'll say, oh, well, we don't have anything written yet. Oh, well, we'll get you something in writing. We'll get you that by the end of today. And that means a lot and it carries a big message. Whether those specific situations end up with us getting that deal is, to me, that's irrelevant. It just shows the broker, hey, these guys are legitimate. This is a real investment group. They want to buy buildings. They want to buy buildings from me, and they're willing to write offers. So I think that's the first message. And then past that, we're writing purchase price. What's our timeline to close? how many days of due diligence do we get, other smaller, call it closing costs, does the seller cover it, does the buyer cover it, and we're really able to get creative to get to a win-win solution for the seller and for us and our investors.
Yeah. With our LOIs, our basis is always the most important thing. We have a pretty boilerplate LOI that we send out that says, hey, we're going to ask for 60 days of due diligence and 30 days to close, and we're going to give you this much in earnest money up front, knowing that we're serious. Those are all things we can push and pull on, right? To make sure we get to the basis that we need to get to make sure we have a good deal for our investors. That's what's most important always on our letters of intent. We don't try to lowball these groups and say, hey, we'll offer you half of what this building's worth. We actually offer what we think this building is worth to us and to our investors. And that's how we move forward with our LOIs. And Peter, did we have a question real quick?
We did have a question. It was, how many LOIs do we write?
Yeah.
As many as we can, I think. But Lane, I guess I'll pass it to you. We've been trying to write a lot, 20 a week if possible.
Yeah, it varies on a week-to-week basis. This week, I've written 2, I think, because it's just been a crazy week. We've had a million other things going on. So we don't just do industrial acquisitions. We also have to help with asset management, with our multifamily developments. So things can get busy, but on a good week when we have some time to underwrite these industrial deals and write LOIs, yeah, we're sending out as many as 20 and we're underwriting 30, right? So it's definitely part of our business to be writing as many of those LOIs as we can. The higher the volume, the more odds are that you can actually get one of these deals and put them in front of your investors, because out of every LOI that we write, we probably end up closing 1 out of 20 or 25 deals. So just the sheer volume is what's really important.
And as we're going to get into later in this discussion, we have some deals that we are almost ready to release to our investors.
Yes.
We'll get more into that, but one thing, just with the idea of a pipeline, even though we have deals that we're almost ready to bring to our investors, it's still just as important for us to be looking at new deals, brand new deals, and continuing to write more letters of intent, because as soon as we get our current deals under contract and closed and out to the investors, if we don't have anything behind that, if your pipeline dries up, it can take months to rebuild that back up. So even if you have active deals under contract, deals that you're closing, we're actually closing a deal today that we started and raised the capital for, I believe, in December. But the pipeline dries up quickly. So you have to keep sending the letters of intent out. You have to show people that you are active in the marketplace at every day of the year. Because as soon as they stop thinking about F Street, these brokers, if they stop thinking about F Street and stop sending us deals, then we're losing an advantage. We're losing a competitive advantage that we currently do have.
100%. Yeah, to your point, the fastest a deal has ever closed for us from writing an LOI to actually closing on the deal is no less than 3 months, more like 4 or 5 or 6. So making sure that our pipeline is continuous is super important to us, and important to make sure our investors continue to have these opportunities going forward. But after we get to an LOI, obviously we go to negotiations, closing, and every deal we're looking at roughly 30 to 90 days of due diligence time, meaning we run our inspections on these properties, we go to get financing, we raise the equity, we finally go to the closing table, and the deal's done. So Brian mentioned we have a few deals that we're getting really close to a sale contract for. One of those being in Ohio, roughly 150,000 square feet. Right now, we are waiting on the tenant of the building actually to sign a lease extension. Once they sign that lease extension, though, the cash flow produced from the building will go from 7%, which is fine out of the gates, to in about 6 months, 13.5%. So that's a credit tenant in a building. Can't say who exactly yet or where exactly yet, but with super high cash flow for guaranteed 3 years. Really excited about that deal. Hopefully coming out with that one in the next month.
Yeah, it's a great manufacturing town in Ohio. Like Lane said, 150,000 square feet. And one thing I want to add to that is one of our favorite, call it a widget, to find these value add deals is to try and negotiate these leases before we buy the building. These buildings, at the end of the day, they are boxes. They have 4 walls and a roof. They have maybe a bathroom or 2 and a little bit of office space, but they're just boxes.
Yep.
how the value is derived of that building is from the lease that is in place or the leases that are in place. So if we're able to get a better lease in between the time we write our letter of intent and we close on the building, that is delivering value to our investors from day one. So with this Ohio opportunity, that is exactly what we are working to do. One thing I want to mention, we do have a wait list for all these investments. If you've been around our network for a little bit of time, you know these deals, they can go fast. If you're signed up on the wait list, we'll get you a first look at this. Any waitlist investor will get a blast slightly before the whole network just to give you a little extra time to review the offering and decide, hey, is this one for me? Do I want to invest with this one? So I know a link will be getting sent around potentially in the chat or right after this to make sure your name is on that wait list. If you think you're on the wait list, but you're not sure, you can just put your name in there again, and we'll be looking forward to sending you that opportunity. But Lane, we have two more.
Yeah, a couple more. Another one also in Ohio. This one's a bit bigger, 300,000 square feet. This is one of our value add plays. Really exciting. So we have a tenant who's actually also the seller. They own the building. They're willing to perform a 2-year, what's called a sale leaseback with F Street. So they will sell us the building and in turn sign a 2-year lease at closing as well. And we know that they will be exiting the building. And because we know that, they've agreed to withhold 12 months of rent payments in escrow. So we know that we at least have those 12 months that they'll be at the building. Now, we don't see them going into bankruptcy in the next 2 years. We know they'll be moving out in 2 years, but we do believe they'll be staying with the building for 24 months. And then, starting 12 months into the hold, we will start looking for a new tenant at the building, and we actually will have a termination right of the initial tenant's lease. So really cool deal for F Street. We have some guaranteed cash flow up front. We have enough cash flow to pay investors preferred return, and then hopefully get some mark-to-market rents on the back end with a new tenant in what we call a backfill. 12 to 24 months post the current tenant.
Yeah, for our value add opportunities, that's kind of the sweet spot. We can pay the preferred return up front on a monthly basis, and we can keep that current. And at the same time, we're also reserving additional cash each and every month to help fund our lease up, because these lease ups are expensive. You have to pay for your debt service, the operating expenses at the building. You have to pay the brokers that help find you tenants and find you leases. You have to pay them leasing commissions, tenant improvement allowances. So budgeting for that up front and having a proactive plan, while being able to pay investors the 7% pref. I mean, these are the deals that we are really hunting for, and we're going to be really excited to release that one shortly.
Yeah. And then Brian, why don't you talk about the Kentucky deal, the last one we have coming up shortly?
Yeah, absolutely. This one, I believe we're about a day or two away from the purchase and sale agreement. It is a slightly rural location in Kentucky, but it's an awesome building. It's about 130,000 square feet. It's a 100% triple net leased asset to a pharmaceutical packaging company. So what they make are they're called blisters. It's what the little pill that you would take is, the exterior casing of that. I just learned that was the exact terminology for it, but it is a highly regulated facility. So the company that is the sole tenant in the building, they've put over $20 million into this space to keep it up to different pharmaceutical grade that is heavily scrutinized by.
We're not scientists, but
as you can tell, we are not scientists. It's a great looking facility. They have 130 full-time employees, and there's over 8 years of lease term on it. So that's going to be a great cash flowing opportunity. Yep. We're looking at cash flowing over 10%, over 11%, I believe.
Closer to 12.
Closer to 12.
Yep.
Right out the gates there. So we have 3 awesome opportunities. They're all a little bit different. They all have a little different risk and return profile, but we're equally excited about all 3.
Yeah.
So when are these deals coming? Lane, if you want to,
Yeah, it'll be varied. So hope in the best case scenario, we'll be starting to raise for the first of those deals, likely the Kentucky deal, in about a month or a month and a half after we've been able to run some due diligence. We don't just like to send this out to investors and say, oh, actually, the roof has a big hole in it, so we're not going to go forward with this, right? So we need to run our due diligence after we get the properties under contract. But the first one should be coming out in about a month and a half, maybe 2 months. Hopefully followed by a month after for the rest of the deals we have available for investors. So make sure you join the wait list, because we will send out an email blast to you first And it's a great way to make sure you have a chance to review the deals. If you want to hop on a call with Brian or myself and discuss if the deal makes sense for you. And like Brian said earlier, we're closing on a deal today, F Street Walker LLC, right here in Milwaukee. We've got a lot of investors in that one, ranging from $50,000 to $300,000 investments. We also have a large 1031. Just as a reminder to our investors, we do accommodate 1031s over $500,000 if you're looking to transition into a new property. We can help you do that with an industrial or multifamily asset. And yeah, Brian, that's about all I had for today. Besides, if we have any questions, we'll be sticking around for a few minutes here. But did you have anything else to add?
No, I think we covered a lot. I think it's always good to show investors a little bit of behind the scenes of, hey, how are we finding these opportunities? They see the opportunities that we're presenting to them. But yeah, like you said, if you have any questions, please toss them in the chat. Lane and I are going to be around. Again, Brian, Brian at F Street, or Lane, Lane at fstreet.com. Email us, call us, schedule a call with us. We're always willing to chat. We like talking about these investments. We live and breathe it every day. So thank you all for joining, and let's be in touch.